Hello and welcome to Switzer Investing TV. I'm Peter Switzer. Thanks for joining us. Now, today's program, I'm kind of, as my old colleague at Triple M used to say many years ago, I'm frigging with the format. So I'm going to kick off and talk to you about what we wrote in the Switzer Report last week and assess, was it any good? Did it actually give people really good insights about what was going on in the markets? And then I'm going to catch up with Paul Rickard of the Switzer Report, because Paul has been putting together model portfolios for about 13 years, and they've all done very well. They actually have outperformed the market. And I don't find it very easy to give a colleague or friend praise. You know, there's an old saying from Groucho Marx, no one is completely unhappy about the failure of a close friend. Well, in the case of Paul Rickard, he certainly has done very well with model portfolio. So I'm going to talk to him about why they've done so well and what he expects to be happening in the market going forward, and how will he be tweaking those model portfolios. So that's the show for today. Let me kick off with this first part, where I look at last week's Switzer Report. I do really think, for those people who aren't subscribers, it is only $397 a year, and we do put out a lot of stuff. You know, there's a Saturday morning report which basically sums up the whole kit and caboodle of what we do at the Switzer Report over a week. There's a Monday report and a Thursday report. There's, of course, the Boom Doom Zoom webinar, which is on every Thursday. And, of course, the full exposure to the Switzer Investing TV product, which you're watching right now. Now, last week, one of the things we looked at was the spectacular success of Guzman and Gomez, up 36% on its first day trading. But last Friday, it fell 7%, and again today, it's fallen another 7%. Now, one of our great writers, Tony Featherstone, had a real good look at it and basically raised question marks over the share price and the value of Guzman and Gomez. I can't disagree with him because I like the food, but he thought McDonald's and other franchises looked like better value, though we can't buy McDonald's on the local market, but you can buy them in the US. So he got that right, and I thought, well, let's have a look at the other things that we called that week. And one of the hot stocks was Santos, the energy play. It did well over the week, up about close to 1%, it might have been 0.7%, but it was a week when the market was down, it went up. And I do like stocks that defy the trend. When the market's going down, people want to buy it. It makes you think that there's a bit of inside knowledge about what this company's doing and how it should perform going forward. Then we looked at a number of other companies. Paul Rickard actually looked at ResMed, because people were asking us lots of questions about ResMed. Did fantastically well about 3 or 4 months ago, and Paul and I both were saying the price at the time was in the low 20s, was ridiculously low, and we thought it would come back. Now then, there's a lot of people saying, oh, these new diet drugs like Ozempic are going to effectively make a lot of fat people thinner, and therefore they won't be snoring so much, and therefore ResMed, which is an anti-snoring product, wouldn't do well. Now, it copped it, and then all of a sudden people started saying, hang on, these drugs are really expensive and they have side effects. And then people started, and ResMed actually reported well, and up it went to a pretty high price. It was about $29. But then early last week, another drug company, Eli Lilly, it did its drug test in a product called, I'm going to have difficulty pronouncing this, but I'll do my best, Tirzepatide. It's that's what it looks like. It's not English, but it does sound pretty trendy. Anything with a Z in it tends to be, just like the name Switzer, anything with a Z in it, advertising people like it, because apparently consumers get drawn in by razzle, dazzle, and dazzling, and all those sorts of things. Anyway, that's just by the way. The interesting thing is, so last Monday, ResMed fell, and Paul was sort of talking about that in the Switzer Report, and he made the point that while Citi had decreased its target price on ResMed, Morgan Stanley didn't move it at all. And when you look at what all the analysts are saying, see the share price fell to around $27.36, But the target price by all the expert analysts who delve into the companies that they're looking at to come up with an opinion of what the real share price should be, that average price was $33.23. So you got a share price around 27, but a target price of 33, according to the experts. That was a real good sign. And we made money for our clients over the week who decided to A, read the report, and B, take action. So I also looked at a whole lot of interesting tech stocks. And by the way, before I just talk about the ones I looked at, Mike Gable, when he came on the TV show last week, which you guys can access, I got him to look at ResMed, and he said to me the chart is sort of saying this stock price can go higher. So that's another reinforcing view that you get from the Switzer Report. We don't just rely on one person's view or just on the views of analysts and experts in various companies. We go to other people like chart experts like Mike Gable of Fairmont Equities to see if we can get 3 or 4 good reasons to believe in a particular company. Now I want to talk about the story I wrote last week where I found 7 really interesting companies that the analysts were giving a big thumbs up. I'll show you the list of those stocks right now. Okay, so these were 7 stocks that basically came to us via the webinar we do on Thursdays with our subscribers called the Boom, Doom and Zoom Show. And we often find stocks that Paul and I don't really know all that well are put to us, and we go and look at FN Arena, which surveys all the company analysts and experts. But we also try and do a bit of other homework on these companies, and some of these companies aren't even looked at by the analysts. And the first one is a one called AI Media Technologies, ticker code AIM. And it was down 2.86% for the week, so it really wasn't a winner. But on Friday, when the market really was a sell-off day, and a lot of selling off before the end of the financial year, it was up something like 1.49%. And what's also interesting about this company is the analysts really like this company. Up 81% is the consensus view of about 3 analysts. And it's an interesting company. I actually dealt with these guys when I had my Switzer program on the Fox Business Channel. They did all the captioning for Foxtel. And I think they've taken this captioning product they had and they've extended it to lots of other areas in the audio-visual space. And of course, a lot of it is based on artificial intelligence, and that's why they've got AI media technology. An interesting one to watch, not one I can actually put my strong support behind, but a lot of analysts do think it's an interesting company. I guess it's for the thrill seekers. The next one is Telex. Now, Telex is a tech company that's done very, very well, up 67% for the year. But the analysts still like it, and it was up 1.36% on Friday when the market was down. For the week, it was up 2.86%. And if I tell a lie there, it was 1.58%. I can't get all my numbers right. And Gable on the TV show thinks this bolter can still go higher. Really interesting one. It might be a company that becomes really well known, like Xero, like NextDC. It certainly is having a stellar performance at the moment. Boss Energy is an interesting one. It plays in the uranium space, and we know that Australia at the moment is opposed and bans the use of uranium for energy. That could change over time. But these guys can dig it up and sell it to other countries, and other countries are using it. Let's have a look at what the analysts were saying about the company. They were tipping an average rise of 30.4% over the next year. Now, over the week, it rose 0.73%. But on the down day for the market, it actually surged 2.74%. So what I say about this company is that there seems to be a bit of smoke around BOE or Boss Energy, and which might suggest there's a bit of a fire coming for something like uranium. The fourth company I looked at was Audinate. Now, I really do like this company. It lost 5.89%, but on Friday it did rise when the market was falling. It's a company that's done fantastically well, and in recent times it's been sold off. I think it's one of those really good companies that is worth thinking about buying when the market is opposed to it. It's in a fantastic space. If you've ever been to a rock concert or a football grand final at the MCG or the SCG, I guess Allianz Stadium or Homebush nowadays, and you see those people walking around with earplugs in and they're talking on their mobile phones or their walkie-talkies or whatever. Audinate has created this sort of Bluetooth technology. It actually is a rival for Bluetooth, a private sector one. And it's being used by all manner of event managers and other businesses around the world. It doesn't really have a rival. And I just think this is a company that really has a lot of potential. When you look at what the analysts are saying, they have a really big thumbs up for Audinate. All the analysts we looked at really like the company. And we're talking about big double-digit returns they're all expecting for Audinate, one really worth watching. A company I didn't know much about is one called Light & Wonder with the ticker code LNW. Now, it really was called something like Scientific Games Technology once upon a time, and it's basically a Las Vegas business which listed on the Australian stock market. It's in the game space, it's in the poker machine space. It last week rose 1.44%. Once again, it was a bad week, it did very well, after rising 53% for this year. Now, Mike Gable had a look at the chart, didn't know much about the company, but he's having a look at it, he said, it's not flashing any warning signs at this point in time. So LNW, it probably is a bit like AI media technology. It's an interesting company. At this stage, the analysts only think about a 7.3% rise, but it actually has gone up, as I say, 53% for this year. Another interesting company worth having a look at. The next one is a company that has annoyed me big time. Its name is Nuix. It's NXL. And let me tell you why I don't have a real warm feelings towards Nuix. This chart says it all and explains why I'm annoyed by it. Nuix was perceived as being a great company, a bit of a spin-off from some smarties from Macquarie. And it was like a data technology company, excited the market, it listed really well, spiked around $11 or higher. And then all of a sudden we started to find out that the CFO was doing some strange things and the CEO was doing some strange things as well. And all of a sudden the share price started falling and it fell down to around 40 cents. It was an absolute shocker, and I'll be surprised if some people in the management one day don't get prosecuted. They really let the market down big time, and it was linked to pretty poor management, but I guess we'll wait and see there. But the thing is this, the share price shows you what a shocker this company has had. It recently has been staging a bit of a comeback and was up over 5% last week. The analysts also quite like it. And so, it's one of those companies. Gable also had a look at it on the TV program, and he too said, having a look at that, there could be another ride higher. And that's what actually happened last week. I think it's one of those interesting companies, but I don't think I could get burnt by it again. But, some people are thrill seekers. The people who bought into Zip, for example, when it got down to around 40 cents, they've really done well. It's well over $1 now. They've made some really good money in buying a company that formerly had some good reputation, fell out of grace, and can make a comeback. So these are the sort of companies I am looking at here. But that's an interesting one, and the analysts at this point in time are giving it a thumbs up. The final one I looked at was one I'd never heard of before, Echo IQ, once again asked of me by people who attended the webinar. the Boom Doom Zoom webinar, and it put on 5.88% for the week, which is a pretty good one. Up 9% on Friday. So there's certainly some people out there who like the idea of Echo IQ. It's kind of in the heart space, using apparently AI for detecting problems in people's hearts. Very interesting concept. Two really important areas, AI and heart disease. Gable did not have a bad word for this stock, didn't know much about it, but he did suggest it looked like a buy around 18 cents and probably a sell at 18 cents where it was on Friday. But still, another interesting company to keep an eye on. One of our other contributors to the Switzer Report is a guy called James Dunn. Now, James is a famous finance writer. You would have seen him write for the Australian Financial Review over the years. He also contributes to our Switzer Report. And he went looking for sort of lesser-known AI companies on the Australian stock market. One's called Straker, ticker code STG, and it didn't really change over the week, and it is down something like 26.68% over the past 12 months. But, there's a bit of positivity around the potential of Straker. The other company looked at is Beam Tree Holdings. BMT is the ticker code, and it had a better story. It was up 4.55% over the week, though it did drop 4.17% on Friday. But to be up that 4.55% of the week, it must have been over the course of the week over 8%. So there's a bit of smoke on that company. And also finally DUG or Doug Technology, ticker code DUG. This had a good week, rising 0.72% on the down day of Friday. But for the 5 trading days, it was a nice 6.15%. So anyone who read the Switzer Report on Monday and Thursday really did bump into some really interesting companies that had a good week, which was a tough week for the market, and are probably really worth watching going forward. And we will do exactly that. That's what we do in the Switzer Report. We aim to give you insights that we get from the expert connections we have and who are people who identify buying opportunities or signal or underline sell-off occasions when it comes to certain stocks. I think it's a valuable companion for anyone who wants to see stuff about stocks that the professionals are looking for 24/7, and that's why the Switzer Report for $397 a year, which for many people could be tax deductible, seems like a pretty good idea if you prefer to make money rather than lose money. And coming up for those subscribers to the Switzer Report, we've got Paul Rickard talking about his model portfolios, why they've done so well, and what he's going to be doing to tweak them to make sure they keep on doing well.